Breaking: Iran is warning the world to prepare for a drastic increase in oil prices, with a potential high of $200 a barrel in the United States. Could this trigger a global economic crisis?
What does this mean for the average American consumer? The announcement has sent shockwaves through the energy market, leaving many to wonder about the potential consequences.
The warning from Iran comes as the global energy landscape continues to shift,
with many countries seeking to reduce their reliance on fossil fuels and transition to cleaner energy sources. You're watching Trend Flow, where we break down the stories everyone's talking about. Let's get into it. Iran's warning of a potential $200 a barrel oil price has significant implications for the global economy.
The country's oil minister made the announcement,
citing a combination of factors that could lead to the price spike. These factors include increased demand, reduced supply, and geopolitical tensions. The minister did not provide a specific timeline for when the price increase could occur. The warning has already sparked concerns among energy market analysts.
The potential impact on the global economy could be severe,
with higher oil prices leading to increased costs for consumers and businesses. This, in turn, could lead to higher inflation, reduced economic growth, decreased consumer spending. But here's where things get interesting.
Supporters of Iran's warning argue that the country is simply preparing the world for a reality that is already unfolding.
They point to the fact that global oil demand is increasing. Supply is decreasing, creating a perfect storm that could lead to higher prices. Critics counter that Iran's warning is a thinly veiled attempt to exert pressure on the global economy, gain leverage in international negotiations.
As we consider the potential implications of Iran's warning, we have to ask, what would happen if oil prices were to reach $200 a barrel?
How would the average American consumer be affected?
And this is where the story takes a surprising turn.
The potential consequences of a $200 a barrel oil price are far-reaching, could have a significant impact on the global economy.
For example, higher oil prices could lead to increased costs for transportation, manufacturing,
agriculture, which could then be passed on to consumers in the form of higher prices. This could lead to a decrease in consumer spending, which could then have a negative impact on economic growth. Furthermore, higher oil prices could also lead to increased costs for heating and cooling, which could be particularly challenging for low-income households. So what comes next? The situation is being closely monitored by energy market analysts, economists, who are waiting to see how the global economy will respond to Iran's warning. The U.S. government is also likely to play a key role in shaping the response to the potential price increase. We can expect to see a range of policy initiatives aimed at mitigating the impact of higher oil prices.
These could include measures to increase domestic oil production, improve energy efficiency,
promote the use of alternative energy sources. Let's break down what that actually means. If the U.S. government were to increase domestic oil production, it could help to reduce the country's reliance on foreign oil and mitigate the impact of higher prices.
However, this could also have environmental implications,
as increased drilling and extraction activities could lead to increased greenhouse gas emissions. On the other hand, improving energy efficiency and promoting the use of alternative energy sources could help to reduce the demand for oil and decrease the impact of higher prices. This could involve initiatives such as increasing fuel efficiency standards for vehicles, promoting the use of public transportation,
investing in renewable energy sources such as solar and wind power.
As the situation continues to unfold, it's clear that the potential consequences of a $200 a barrel oil price are significant and far-reaching. The global economy is complex and interconnected. The impact of higher oil prices could be felt in a wide range of industries and sectors, from transportation and manufacturing to agriculture and consumer goods. The effects of higher oil prices could be profound. And as we consider the potential implications of Iran's warning, we have to ask, what can be done to mitigate the impact of higher oil prices? How can we work towards a more sustainable and resilient energy future? The warning from Iran has also sparked a debate about the role of oil in the global economy, the need for a transition to cleaner energy sources, as the world continues to grapple with the challenges of climate change. It's clear that the use of fossil fuels must be reduced and that alternative energy sources must be promoted. This could involve a range of initiatives. from investing in renewable energy sources to improving energy efficiency and promoting sustainable land use practices.
The transition to a cleaner energy future will not be easy. It's a necessary step towards reducing our reliance on fossil fuels and mitigating the impact of climate change. As of March 11, 2026, this story is still developing. We will continue to monitor the situation. We will provide updates and analysis as more information becomes available. We will work to break down the complex issues and implications of Iran's warning. Subscribe for more daily news breakdowns and hit the bell so you never miss a story.